We'll also see what kind of action we get in Tesla. Now, I just was showing the shares. They are showing a little bit of an indication for a higher open here this morning. The shares are up 51% year to date. They reached a record high on November 4th. At some points during the session yesterday, we're down as much as 23% from that record high, but managed to close just down 18%. This, by the way, as Elon Musk spoke at the Wall Street Journal CEO Council and told the Journal, we don't need help from the government. He talked about President Biden's plan that would give consumers a tax credit if they buy an electric vehicle that's assembled by union workers. He says, honestly, I would just can this whole bill. Tesla has, I think you can pretty easily argue, particularly in its early days, Tesla benefited enormously from tax credits and incentives.
It's likely that Tesla stock continues to take its cue from sales numbers and the profits from those sales instead of like what we saw yesterday with that SEC investigation into the solar panels for the company. This is something that might pressure the stock here. Today, maybe not, but longer term, yes, because one of the reasons you go out there and buy Tesla is because of its full suite of services. It's the performance.
You know, what was really interesting, just to kind of go back to the bigger picture question that was addressed to the head of Tesla there, which was really about the infrastructure bill and just kind of the Biden administration's efforts. He said that it's unsustainable for the United States to continue to spend that money. But what was interesting was that even though he said he doesn't support subsidies, he wouldn't support the package itself, broadly speaking, he does see the need for a big infrastructure change in the United States. He said that will actually exacerbate traffic across the United States, especially in the major metro areas. It already is a massive problem. But I think his argument is that it shouldn't be the government that's subsidizing those types of projects. It should be private capital money, which, of course, someone of Elon Musk's stature would say that. Even with the EV stations, right? That's a big selling point for the BBB bill as well, which is, well, we can kind of help expand the network of EV stations that are out there. But Elon Musk said, we don't need those government subsidies. It's not like the government subsidizes the proliferation of gas stations around the country as well. That's kind of his argument. Of course, I'm sure many Democrats and those on Capitol Hill would argue he's kind of saying, look, I just think private money needs to be there. It's not that he's opposing infrastructure improvements per se.
Spoke to the Wall Street Journal. Stock almost entered a bear market. We've got that big feature, as Soz mentioned, in the New York Times about the autopilot and how much he had been pushing that technology.
In an interview with the Wall Street Journal, Musk says that the bill, which includes, and who, if anyone would want it, it would be him. Federal funding for electric vehicle charges. You know, the free market does do things pretty well. It would add to the country's deficit. Under the plan, consumers would also be given a tax credit if they buy an EV built by union workers using American-made batteries.
Which
vehicles
Tesla
made in
is
non-union factories. And you know what non-union factories like Tesla's would qualify for smaller credits. Musk said he's all in favor of dropping all federal subsidies. You know, he's talked about Bernie. He's talked about the woke progressive left. And he's definitely taking a stand. He's moving to Texas to get away from taxes.
Elon Musk have definitely benefited from those government interventions over the years. 2018, when the company's near bankruptcy, if not for those tax credits that people were getting for the Model 3, the Model 3 would have been that much more expensive, and Tesla would have been that much more in trouble as it tried to generate the money it needed to stay afloat. Tesla definitely, and investors definitely, have benefited from the government's help. He definitely is sounding like a big automaker now, right? I mean, look at Toyota is also unhappy with these proposed EV credits because they, too, would not benefit from them in the same way that General Motors would. Years ago, when traditional automakers were kind of trying to push back against some of these benefits that the Tesla was going to benefit from, right?
He's fearless, and he's, you know, he's the richest man in the world, I guess. But isn't there any way that he could really believe, as a libertarian, that the private sector is so innovative? People would say they bailed out the financial system, that there's socialism and corporatism for big companies.
He went into SpaceX hoping to kind of ignite interest in the space race, and then ultimately they become this giant. In the last decade, as he kind of pushes back against government agencies, yes, Elon Musk clearly has a long track record of kind of pushing back against the rules that government have out there because he feels like they're in the way of innovation.
Now, another company that we are watching this morning, I mentioned chips yesterday and what we were seeing there. We're talking EVs. Here's something that brings them together. Intel says it is indeed going to spin off and list shares of its Mobileye self-driving car business. It aims to do that by the middle of next year.
Yeah, top ticker on the Yahoo Finance platform right now is Intel. He didn't acquire Mobileye. Mobileye is a series of assets that Intel bought in 2017 that he bought for $15.3 billion in 2017. Then new CEO at the time, Bob Swan, came out and bought Move It, which is a data collection service, bolted that into the Mobileye business. Both of those assets were consumed in 2017. Move It was acquired for $900 million. This is Pat Gelsinger moving away from a strategy created by his two predecessors. Number two, you have an Intel very thirsty on trying to build out new production capacity for its chips, or what they call foundries. That is a huge return and a huge chunk of change that Gelsinger could go out there and use to build his various foundries and make investments in what he sees as the future of Intel, which is just making chips. This is not some lame asset here owned by Mobileye. It is a surging business inside the company that is in fact profitable. They're noting that revenue from Mobileye on a trailing 12-month basis, or in other words, year to date, $1.36 billion in sales, $442 million in operating profits, which really reflects what many see as a leadership position in the autonomous technology market for this company.
For comparison, that $50 billion possible valuation, compare that to the $15 billion price tag that Intel paid for it in 2017. And then even if you back up to 2014, where before that transaction was done, actually Mobileye was publicly traded. Its IPO in 2014 raised about $5 billion, a tenfolded increase in size and valuation here. And that's no surprise given the need for chips. And in fact, the second paragraph of the release from the company that was announcing this, 20% of a premium vehicle's total bill of materials by 2030. It's not like cars have one chip in them as they continue to get smarter. Many components, many parts, almost all the parts of the car will have to be tied to a semiconductor of some point. That's one big reason why Apple also wants to get in the space, and one big reason why Mobileye could also be a hot stock.
Yeah, and I think the fact that it is that top trending ticker today gives you a little hint as to the demand there could be potentially for those shares.
For more on that, because as you know, Steve, you own Volkswagen and Porsche, don't you?
I do. I own them both, and Porsche, of course, owns about 50%. So, look, it's been a little bit of a disappointing performer this year. Can't argue. They're hiring bankers, supposedly Freshfields and Goldman. Let's just compare it to Ferrari for a second. So Ferrari sells about 12,000 units a year. It's got a market cap of $66 billion. Its operating margins are about 25%. You know, that's on revenue of $4.5 billion. Porsche alone has revenue of $20 billion. They will sell also a bunch of Bugattis, right? Bugatti's average selling price is $4.5 million, and Lamborghinis, they'll sell about 9,000 Lamborghinis. The entire market cap of Volkswagen is about $120 billion. Porsche market cap estimates could go from 50 to 100 billion on that company alone. If that happens, you'd have a total value. You could have a double, actually, of where the stock price is on Volkswagen, which is trading at about 7 times earnings, despite being one of the top EV sellers in the world, and will be the top EV seller in the world. I mean, you've got a double in the overall company, and the Porsche spin out alone, to me, that's much more valuable than Ferrari, which is selling roughly the same number of Bentleys, you know, overall, with just 12,000 units in Ferrari.